Hello traders, today is Wednesday, April 3rd. We're going to take a look at the roadmap software on the TradingView charting platform. This is relatively new and it has some other features with actual targets and stops built into the software. Now before I cover what's happening here, remember that trading is risky. Please don't trade with funds you cannot afford to lose. There are risks involved with trading. So if you're taking a look at how the roadmap works, you can see that there are these signals here to go long, and if I go back here, there's these signals here to go to the short side. Now the reason why this happens is based on the roadmap zones. Every time the market breaks these zones, or more importantly reverses or bounces off of them, we have an opportunity to enter long or short. Let me actually increase the size so we can see them a little bit larger. I'll make this huge and I'll make it same. Okay, so we can see them a little bit better. So what's happening here, let me just start off with earlier today as soon as the market opened. So what you're seeing here is exactly what everybody else also is seeing on their charts if they have the roadmap software. What happens is the market lands in this zone here, right over here, and it doesn't go through it. It actually gets what I would say stuck, right? So you can see that it hits this zone here. Let me just expand this out here, and it gets stuck. So once the market lands in this zone, we have an opportunity here to sell it unless it goes through it. And so that's why you see here a roadmap short, because the market landed in the zone. We have these candles here that are painted yellow, and if they're painted yellow, that means it's setting up for a trade. And so they're painted yellow, setting up for a trade, finally tells us to go short. This purple line that you see right over here, this is the target. That's the target. Now, if the market does not reach your intended target, usually we tell traders give it a good 20 minutes, maybe 5-6 candles. If it doesn't reach your target, it's always a good idea to exit the trade. Now you see here this roadmap long. It's because as soon as the market broke through this zone that we have, it broke through and it said this zone is no longer valid, go long. So we have this signal here to go long with the arrow. It broke, and here is actually that purple line once again. Let me see if I can expand that out. That purple line right there is indicating that's the target. And let me see if I can make that a little bit more pronounced for everybody to see. And make that yellow. Okay. All right, so the yellow is the take profit. And so what happens here is as soon as the market breaks the zone, we go long, and that's our profit target. It broke this zone here to go long, there's our profit target. And that's the reason why we see this roadmap long 52.68. So we try to be very specific with the entries. And that purple right there, that's the stop. So entering long, once it breaks, this is right over here, the stop. This is the stop once it broke, and that's the target. So we try to have the targets, the stops built in. Now, as the market comes down here to zone A, it didn't reach the zone, it didn't trade in the zone, it didn't land in the zone, there's no trade. It came up, resets, here's a new roadmap zone, and it's telling us to go short. Again, the yellow, I just changed that, would be the profit target. Comes down, lands in the zone, reverses off the zone, roadmap gave you an entry to go long. Again, this is another opportunity for a reversal. So this is a reversal, counter trend trade. Remember, it lands in the zone, doesn't go through the zone, gives you a long, and that purple line, if you could see that, I'm going to see if I can actually make that a little stop loss, make that a little bit darker. Let's make that pink. Okay, we can see that a little bit better. So once you enter long, that is the stop and that is the target. Same thing is true, lands in the zone. We see the yellow candles. These are setup bars. We say get ready, get prepared. It gives us a signal here to go short. That purple is the stop. We didn't get stopped out, hit our target. Same thing is true. The yellow line is setting us up, and then it reverses. But in this case, these candles are so large for today that it's almost impossible to jump in on a situation like this. So this is a much better trade. You're entering right as it begins to turn around and enter in your favor. And that's why we have this roadmap short and roadmap short as it starts to turn around and go to the short side. So it hit the targets here. Those are the yellow signals right there. The yellow line is the target. All right, now I think it's important to show you a real live example as the market is working, not just showing you what has happened in the past. So this is the same day. We're about an hour later. You can see that the candle is yellow, landing in a roadmap zone, the roadmap zone A down. This happens to be. So once it lands in the zone, we don't really know if the market is going to go through it and continue lower, but that red line that you see there, that's an opportunity in case it does continue lower to go short at that price. So that's actually an entry opportunity, as if it's breaking the zone, continuing in the same direction, strong trend. And so you have that 52.66. That's exactly where that, or actually 52.66 quarter. That's exactly where that is. It's about 2 or 3 ticks below the zone. It's always going to be the same, 2 or 3 ticks below the zone. It's indicating to go short if it breaks the zone and continues. But more often than not, if the market is, I would say, normal volatility, not too fast, typically what it does is it lands in these roadmap zones and it reverses or it bounces off of them. And so we're not doing anything yet until it becomes clear on the direction the market wants to go. So now the market is starting to reverse off of it, and you see a signal created by the software, roadmap long 52.69 quarter. So now what this is telling you is that we want to go long at this price. The yellow line, that small yellow line just above, would be your first profit target before you consider trailing a stop. It'll stop moving once the candle closes, right? It's working off the ATR. 1 times the ATR, the average true range, is the first target. So it'll stop moving when that candle closes. And if you can see just below the zone, there's also a small red dash. That would be your stop as well. Going long, there's a stop and there's a target. But if it, in case the market reverses and completely just turns around and goes lower and breaks the zone to the downside, you have that opportunity to go short. So this is a good illustration of a live example. There's the target, there's the stop, there's the signal. Here's the reason why we're entering long, and if in case it reverses, we can then take it short as it's breaking the zone. If you have any questions on the roadmap software, it's available for Ninja Trader and now new for TradingView. Visit Daytradetowin.com, join the new Accelerated Mentorship Plus, which includes live classes every day, and learn how to trade price action. Until next time, good trading.